A bearish trend following alert for the Dow Jones Industrials and an update of where the market is at this morning. I'm Rich Paz for Critical Point, Friday, February 21, 11:02 a.m. Eastern Time. So we've seen some selling this morning, and I had been concerned that yesterday's blip up was too high, too fast, and should not have been a level 4 bottom, but the model was willing to respect it. Well, the model's flipped back saying, yes, it's not dropping into a brand new decline over the next few days. It's probably dropping into a level 4 bottom today. But normally that would make me think, okay, it's going higher today into Monday, might go up a sizable amount. Model's instead saying this next level 4 bounce probably won't matter, probably won't be that big a deal. At best, it moves back up to maybe around the 61.23 level in the futures. And so it's just saying this can get sloppy, but what's going on is these level 4s are going to give in one way or the other to follow a larger level 3 downtrend into next week, perhaps even into the following week. Now, we currently have downside objectives as low as 60.40 for the S&P 500 futures. So consider that as a target next week. Now, on the news side, we have United Healthcare down 9%. They're down over 20% for the year or something like that. There's a few other stocks that have been taking some serious hits here. We have real estate prices, headline news in Bloomberg, CNBC, that they're still moving higher, but the demand is backing off. It's too expensive. Sales are dropping sharply. And then on the mortgage side, even at 7% rates, people are just not buying homes. They're not taking that mortgages, okay? And that's a pretty volatile indicator to watch. In my opinion, that's all microeconomic stuff for the real estate industry. That's not yet a negative for the U.S. economy, but it is something to keep an eye on. Now, last night we heard Japan's inflation jumped to 4%. That's almost near the high of the decade. A week or two ago, I said that I anticipate higher inflation for China, Japan, Eurozone, and UK this year. And just got some evidence that that's on the right track. Now, last night, that bothered the Japan stock market at first. Then later, it shrugged it off, and the U.S. market seemed to shrug it off. But now, the headline news at Bloomberg CNBC is people think most of the economic data we've had today and late this week is negative. So they're feeling concerned about the future of the economy. In addition, I think it was on Bloomberg and CNBC that Bloomberg was saying that if you look at the sentiment ratings and consumer confidence of what they're thinking, what people are thinking for inflation, they expect 3.5% inflation over the next 5-10 years. They don't see any break inflation. They think things are just going to continue to get more expensive here. So that's a negative for the stock market right now. So I think the stock market has been very, very slow to acknowledge some of this developing negative stuff, but it's getting more increasingly concerned, even though it still has this attitude of buy quick dips. It's like it doesn't have the traction to really push it anymore for record highs, and then they just give up and back out yet again. All right, now what I want to do is go over to the weekly chart for the Dow Jones, and we have a trend following signal. So what's going on is I think we have a critical point objective for around 43,000 to 42,500. I have other studies, even fundamentally, of 42,000 for the Dow Jones going into a level 2 bottom late March, early April. I think the Dow Jones is the weaker of the NASDAQ S&P 500 group, and it's leading the pack lower. Trend following is where you sell on the way down. You want somebody to sell first. You want some evidence. And even though you might have to write out severe knee-jerk reactions and have a frustrating time with it, and if you're wrong, you might actually lose more than a timer, the theory is that the odds are greater in your favor and you won't really see that risk and you wind up winning. In addition, trend following can with various types of settings in their trading and investment systems, they can wind up ignoring some of the smaller trends that catch timers off guard. So in theory, they can stay in for a much larger trend that they really weren't planning on and actually make more money than everybody else. But the problem is they also have some sloppiness and drawdowns and going nowheres for a while. I view the trend following as just a backup thing. So in my opinion, we already gave you the signals for a level 1 top for the Dow Jones in recent weeks, just as I gave a signal in December to sell. And I've had this theory from December today is just one sell right after another here. And it's just a matter of time of getting the market to break down. Well, it's looking like the Dow Jones has violated this uptrend. It's below the 5-week average. And indicators are rolling down out of the overbought and giving a sell signal at this moment, and wide enough spread that if it will stay there by the close today, it is suggesting chance for lingering near-term downside momentum next 1 to 3 weeks, while the model's thinking 3 to 5 weeks down. Okay, so I think this is just getting started for the Dow Jones. I don't think it looks good at all. I don't think this is one of those buy the dip moments. Frankly, I think we're losing demand here and starting to finally increase the supply. Okay, and I think it's just a matter of time of the S&P 500 catching on board with this, and the NASDAQ catching on board. And this is the S&P 500 cash right at the moment, looking like a negative weekly reversal. So it can be ready to go down in late March, April, but it is at the moment setting at the 5-week average. I really need a weekly close below that to help increase confidence that it's doing it. The weekly indicator has been overbought and very quiet, and not yet at a sell signal, but it's quite close. If they'll hit it a bit more going into the close today, we may get that. And then the NASDAQ is pretty similar to the S&P 500. It's trying to hold up the best here, but I think ultimately we're going to be right. It's going to be down by late March, early April. It's just a matter of, is it ready to do it now? Is it just kind of toying with us, playing some games here? It's like it still doesn't really want to go down, but it's finding it increasingly difficult day by day to find enough reasons to go higher. And pretty soon they're just going to give in and say, okay, maybe the net balance here is there's reasons to actually go lower. And the Dow Jones is giving us a clue of that. And I'll wrap it up with the equal weighted index that can relate to the Dow Jones. And look at that. They snapped it up. Quite impressive this week. Respected what's probably the level 2 top, but it is possible it was placed this week. But notice it's coming down for a negative reversal. We'll see if they can sustain that. But it's likely going lower into late March, early April. That's all the latest news I have you. But it is interesting to see some of these big name headline websites in Wall Street saying economic data doesn't look as good as they thought. Have a great weekend. Thank you.